using the USD Japanese yen currency pair. See where price is at right now, where we anticipate to get to in the coming week. I want us to do the analysis, looking at the market structure, the technicals. Then we'll also look at the price action, as well as going into the institutional order flow to see what the fundamentals are, not necessarily in terms of the news, but what the big players in the markets are doing, especially the big banks and the hedge funds. So let's go to the monthly time frame. Now, looking at this monthly time frame, we see that price had formed a minor area of resistance on its way to the upside. There's a bit of hesitation here. Price retraced to come and retest this area of support that had been formed before, but it was rejected. Price was able to reverse to the upside. It ended up closing as an indecision candle within the range of this previous bullish candle. Then we saw price retrace down a little bit and then spring up to the upside, breaking through this resistance area. And now we see price returning, and it's currently retesting this broken resistance now turn support. And as we can see from the look of things, it wicked a little bit below it but was rejected. But this candle is still running about half a month to close, so it still has long ways to go. We will see how it turns out, but currently analyzing price from what we are seeing currently, it's that price is testing this area of support. It wicked through it and is currently trading above this support area. So from the monthly perspective, the structure is bullish. The fact that it is trading above this broken resistance now can support, and at least for the short term, this support area is holding price to the upside. So we'll go down to the weekly time frame. Now, looking at this weekly time frame, if I could zoom out a little bit, you can see very clearly that price has been trending to the upside, and so it is clearly a bullish market as far as the weekly perspective is concerned. You'll also notice that price has been making a series of higher highs and higher lows, higher high, higher low, higher high, higher low, a new higher high and higher low. Now recently created a new higher high, and it's now in the phase of creating a new higher low. Now that tells us and clearly shows that the structure of this USD Japanese yen currency pair is bullish. Now we've seen that the monthly is bullish, the fact that it was being held above the support area, and now we are seeing the way that the market has been forming higher highs and higher lows on the weekly time frame, that it is clearly bullish. But we'll look at some more details to confirm this bias. When you look at this area here, price created a resistance level, then it was able to break through it to the upside, retrace to come and retest it. Upon retest, the support held, which was previously resistance, and then bounced off price to the upside. And in moving to the upside, we see there's this outside resistance area, but there's also an internal resistance area right here. So it is price is currently touching this external resistance area, but I want us to look at this internal resistance area to see the details. So I'm going to zoom in a little bit. Now you can see that price is touching this resistance area, now turned support at this point here. When a resistance is broken, it becomes support, and we saw price break through impulsively to the upside, and is now currently retesting it. And we see that this wick that has just closed, it closed bearish, but much as it did so, it was able to close above this resistance now turned support area. This support area held price to the upside, and that's above it. It was able to wick through, but price was rejected at this support, and it ended up closing way a little bit above the support area. Now, as long as price is still trending above this support area, then the structure of the market is technically bullish. The character itself is bullish, and the only way that we can have the character and the structure of the market change is if it is able to create new lower lows to change from the lower highs that it's been creating. So we would need it to create lower lows and lower highs for us to confirm the change of structure of the market. But as it stands now, it is still heavily bullish. So we have the monthly time frame and now the weekly time frame all telling us the same thing, that it is bullish. So we are going to drop down further to the daily to see what the daily has to show us. So we'll drop down to the daily. Now this is the daily time frame. If I zoom out a little bit, you will also see that price has been trending to the upside. In fact, you will notice that it's currently testing this support area at a bullish trend line. If I could zoom in a bit, you will also notice that price had created this resistance area on its way to the upside, and this resistance area held price quite a few times. This time here, as well as here where it was able to wick through, but price, much as it picked through, it ended up closing below this resistance area. Then we later saw price break through it, and once it was able to break and close above it, the previous resistance now turned support, and currently we see that price is retesting this area. Now, it's not coincidence that this support area is in confluence with this trend line, the bullish trend line that is coming from the downside, and so they are converging at this area here of support, and that gives it more credence, and it also aids our bias that the two confluences combined together will act as a strong rejection point to hold price to the upside and possibly have it bounce off to the upside. Now, the details that I want us to go into, I'll zoom in a bit. You will notice here that on the way to the upside, price created a double top before finally breaking strongly to the downside below this neckline. And so there was a neckline here, and price was able to blast through thanks to the CPI news that we had in the week, and that drove prices to the downside, and it's now retesting this support area. But there's something else that I want us to see. Look at the range of this bearish candle, and I'm talking about this first bearish candle. Now it opened way up here, dropped to this low before being rejected, and it ended up closing up here. But from way up here to way down here, that is its range, including the wicks. Now this new candle that has just closed opened and closed within the range of this previous bearish candle. So it was held in the range of the previous candle, or we'll call it now an inside bar. An inside bar. It closed as an inside bar within the range of the previous candle, much as it was able to wick just a tiny bit below it. We see it was contained within the range of this previous bearish candle. Now, the fact that it wasn't able to close below also indicates to us that probably the bearish pressure is gone, and we could see price bounce off this area of support and drive back to the upside. The other thing I wanted to notice is once it broke below this neckline, after having formed what we know as the M formation, price is likely, after bouncing off this support area, to retrace, to retest this neckline to complete the M formation. Because the completion of the M formation is done at the retracement and the retest of the neckline. And so that's what we are anticipating this price to do. We anticipate that price will be rejected at this support area and retest this neckline to complete the M formation. And so the monthly perspective is bullish, the weekly perspective is bullish, and now the daily perspective, according to this analysis that I've just showed you, is also bullish. And so we will look to see what kind of price action will form within this area to see if we can have setups that can inform our bullish buyers to have Aztec entries to the upside. But remember, we do not predict the markets. The best we can do is to analyze, then sit around and wait to see if price will produce the necessary setups that meet our entry criteria that we can then take and hope that price rates all the way to the upside. Our role in the market is not predictive. That's why the best we can do is to analyze and forecast. Our role in the market is simply reactive. So we'll look at the COT data to see how the institutional order flow is. Now the COT data is basically data that is a requirement by the Commodity Futures Trading Commission in the US that it requires for all the players in the market to file their positions, and so it is free data that anyone can access to see how, because it is an aggregate of positions that are held especially by the big players in the market. Now, that's what we are looking at right now. And remember, all instruments on the spot market are traded against the US dollar. So everything that you see within this COT data is about the yen currency. But remember, you cannot trade the yen as a single currency. Currencies are traded in pairs, and so this figure that you're seeing here is a figure of positions taken within the yen pair against the USD, because all instruments on the spot market are traded against the USD or the dollar. And so when we look at these most recent filings, we see that the previous filings were as far as longs are concerned. Now, longs is another term for buys, and a short is another term for sales. Now, the previous filing of the longs had a figure of 36,000. Now, the current filing, the most recent filing, the figure was 41,000. That means there were 4,000 new positions taken on the yen. So 4,800 positions, buy positions, were added to the yen, while when we look at this column of the shorts, the previous filing was 220,000 and the most recent filing is 223,000, which also shows us that the shorts were also increased by 2,600 positions. But there's something I want you to look at. Compare the number of shorts of the yen and the number of longs. The number of shorts are 5 times much more than the number of longs. That means they are shorting, the rate at which they are shorting the yen is 5 times higher than the rate at which they are buying the yen. Now, every action taken on the yen is a reverse action on the, now for example, if you are trading the USD Japanese yen, the yen is the quote currency, while the USD is the base currency. So now, putting this into perspective, the number of shorts taken here on the yen, they are inversely the number of longs taken on the USD. So these are shorts taken on the yen. Now, these actions are taken on the yen. The reverse of the actions taken on the yen happens on the base currency, which is the USD. So if they are selling the Japanese yen, they are inversely buying the US dollar. So when you see that these positions have been shorted in the yen, it means that inversely the same positions have been longed on the USD currency. Why? Because these instruments on the spot market are traded against the US dollar. And so the fact that they are shorting heavily the Japanese yen, that means they have lost confidence in the value of the yen. And so they are transferring their positions now instead into longs. And so they are shorting the yen and inversely longing the USD. And so they are heavily selling the yen against the dollar, which means they are actually heavily buying the dollar against the yen. And the fact that the yen is the quote currency in this case, that means that when we come to the charts, if they are selling the yen and buying the USD, we can only expect bullish moves in the market. We can only expect price to continue bullish. And now when you look at the net positions within this column, you will see, looking at this last column with the most recent filing, you can see the net positions are negative 182,000. Wow, negative 182,000. These are whole loss of confidence in the yen against the dollar. Now, that only tells us that if this currency is being traded against the dollar and the big players in the market have lost confidence in it, the fact they're actually shorting it, using our judgment on the basis of analysis, we can only tell that probably the market is likely to turn around from this strong move that it did on Thursday and Friday, and then we are likely to see price turn around and push to the upside. Now, we're not trying to predict the markets. Remember, like I said, our role in the market is not predictive, and remember, the markets are all about probabilities. We are just looking at scenarios where by analyzing the markets and putting all the data together to have a strong informed decision, because trading is not gambling. Trading is informed speculation. It is informed speculation. And so you need to look at all